welcome to this video. I wanted to do a breakdown of the two trades I've taken on ES. So I've taken two trades, one loss. Alright, so let's show it, not this one. Okay, so I've taken one loss, okay, and I've taken a one winning trade. So I will guide you on why did I lose on this one and why I've decided to enter again. And the ultimate goal of this video is to actually teach you something called AL Model 1. Okay, so in advanced liquidity we actually have two AL models. Okay, so we have two AL models. So the AL Model 1 is a model which goes towards the upside, right? Let's say this is the leg, so this would be the L Model 1. L Model 1 is the way price accumulates at an area where retail are not interested in buying. So in order to understand this, of course, you need to watch the What is Advanced Liquidity series, but I will explain about it briefly in this scenario. So as you see, we are marking the low and the high of the market structure. Now retail are looking to enter positions, right? So retail want their position to be higher than 1 RR. So if they want to enter a position over here and they stop with the low, right? So they want the position to be in a good RR, right? So in retail side, this would be a great position, right? They wait for price to go towards the position. Now they've entered the position and they can profit from the trade. But let's take an example. Let's take they are taking a trade over here, and this would be their position, right? So the position would be below 1 RR, right? Not many profit within a high risk. So retail won't be interested in longing this area. So if retail are not longing these areas, the premium area in this scenario, and they are looking to long the discount area, this scenario. So if market makers want to trade, right? If you remember, market makers want to trade alone, right? If they want to go to the upside, so they do look for two things: or retail shorting or retail not participating. So in this case, in AL Model 1, price accumulates at premium, right? Without letting retail participate the move. So this would be AL Model 1. Now let's show you it on US. Yes. Right, let's remove this. Now, let's do it like this, just a second. Now, what do we see over here? We see a bullish market structure, right? We want to mark the market structure. We see this market structure. Now, we've created a bullish leg, right? So this would be the high of the market structure, right? This would be the high of the market structure, and this would be the low of the market structure. Right, when I took the trade, we were at this stage, right? So we had this market structure. As you remember, we take the fib from the low to the high. Now what do we have over here? We look for a retail PY, right? So retail are buying market structure pullbacks, and they are also buying SNR levels, right? So we have two SNRs. We have this SNR and we have this SNR. Right, now what do we see over here? We want to look for the SNR that retail are buying and the SNR that retail are sidelining for. So how can we say which SNR they are not trading and which SNR they are trading? By the grid emotion, right? If you remember from the video series. So this SNR, based on the higher time frame, is too far from the swing low, right? You see? On the other hand, this SNR is close to the higher low. So retail won't enter position like this, right? This is a position retail won't enter, and on the other hand, this is a position that retail would like to enter. Now, what do we understand from this over here, right? If we know that if price will return back to this support, so retail will buy in, right? If price returns, let's draw it like this, so the support that retail are buying, we will draw in a red, and the support that retail are not buying, we will draw in gray. So if returning to this support area will enter retail buyers, so what does it makes? It makes this low sell side, right? So this low would be sell side if we'll return to the red support. But you ask yourself, so why this support doesn't trigger this low? Basically because it's too far from the low and retail are not entering trades with a stop loss over here. So based on AL model 1, we should accumulate these areas, right, without dropping to letting retail in and expand towards the high. So your safe play would be longing like this, right? But you don't have enough RR, so you will want to drop to the lower time frame in order to refine it. But this is your bias. You want to see price expand towards the high without retracing back to these areas. Now you ask yourself, why does the market makers make this support works? Because let's show it like this. Okay, so let's say you have something like this. You have a SNR level that never works. Okay, it will never ever work. So retail won't use it. So they want to let the SNRs that retail are sidelining from, like this one, they want to let them work. On the other hand, the SNRs they are entering won't work, right? So this will work and this won't work. So this is a great area for an expansion, right? An SNR that retail are not trading is a great area of an expansion. So my bias is towards the high. Right, so what I was looking over here. So I know my bias, I know my validation, this area. Now, what did I have seen over here? I've seen a very, very clear, right? You see we had a bullish market structure. Now we've taken the low of the market structure, right? So this is the market structure, right? You see, and we've changed the trend. So now retail are selling these retracements, right? We have this resistance and retail are selling this resistance and placing the stop loss at the first swing high, right? So we have buy side at the highs. Now from this resistance I want to see some sort of a rejection, right? I want to see a manipulation to the downside to wait for this manipulation and to ride it towards the upside. Now let's explain you my first trade. Now we still have created a buy side high, we didn't take it, we've rejected, right? Okay, I've come too far. So we've approached this area. Now what was my problem over here, right? I've seen this resistance reject, right? So I've seen this rejection to the downside. We've taken one sell side low, right? We've taken this sell side and we've returned to give retail a chance to sell. What didn't I do right over here? Two things. First thing was I didn't saw price jumping from a very, very clean resistance plus very clean market structure. So the goal over, so the safe play would be actually waiting for this sell side to be taken and only then act, right? So this would be the safe play. The safe play I didn't see at the time. Right, I've seen price taken sell side, return, gave retail a chance to sell, and I've expected price to go up. Another thing I didn't see is that the 1 hourly, right, the resistance, 1 hourly resistance didn't actually had a proper manipulation, right? This isn't a proper manipulation. A proper manipulation would be a close and a black, right? Red candle to the downside, like we've seen over here. Right, you see we had a black candle to the downside, so we can call this a manipulation, right? So this would be a manipulation that took the sell side, right? So the moment I've seen price take the sell side and do this manipulation, we actually had a great entry. So we've taken the sell side, we've closed above the sell side, we've done the manipulation from the resistance, and we had a great option for an entry towards my bias. So this was the trade.